What is up, guys? Okay, so today we're going to be talking about order blocks or like just consolidation zones. I'm just going to make this like layman's terms for you. You don't care about order blocks, liquidity, whatever. You don't care about that. You care about what does this mean to me as an investor? I'm going to be talking about how these consolidation zones can play a role in buying opportunities to then catch movements to the upside. And so generally, just this is what I mean when I say like a consolidation zone, order block, whatever. It's when price has movements, let's say to the upside. Usually usually the movement to the upside is pretty fluid. Like it's obviously gonna have like maybe this is the monthly time frame, then you zoom in on the daily, it's gonna be more like jagged. Okay, it doesn't look that jagged, but you get my point. It's gonna be more like jagged. There's gonna be down moves on the daily. There's gonna be plenty of movement, but generally market, if it's in a specific trend, so this is clearly an uptrend, these up moves are going to be a lot smoother than these down moves. And what that does for us is that tells us that these down moves are going to be like this. We're going to have this up move and we're going to have like this down move. That means that price very well could take the same amount of time to create this up move as it takes to create this down move. It takes the same amount of time for price to go up. I don't know how many percent. How many percent is this? Price to go up 37%. As the time it takes for it to go down 8%. That could very well be the case if a stock is in an uptrend or in a downtrend or whatever. And because of that, price for this time period is consolidating. It's just gathering orders. This is a big opportunity for banks to gather orders. They see this zone and they're like, okay, this is the zone where we were able to gather a bunch of orders because we were able to stay at the zone for the longest period of time. And if we're able to stay at a zone for the longest period of time without it moving drastically up or down, that means we could gather orders there, which is why it's called like an order block. Or like I said, more simply put, it's just an area of consolidation. It's a consolidation zone. And so what does this mean for us as investors? This means that if price were to go up out of this area, and then for some reason it retraces into this area, this is where orders were filled. So this is like, think about it as like an extremely bouncy like slime block from Minecraft, or like a trampoline. This is a place where if orders come into there, they're going to get filled massively. So they're going to want to go out more times than not. Of course, there's the one time where it could break through. And if it breaks through on its way back into this zone, it could then use it to fill orders and then continue down. But the point is that this is a zone where price is able to, or where banks are able to fill their orders, which means that this is a zone where you can invest and then either, take longs to the upside, shorts to the downside. But since we're talking about investment purposes purely, you can combine this with previous all-time highs, liquidity sweeps, whatever, to catch a further move to the upside. Now, let me show you an example. So here is ES. Go ad free everywhere. Got to pay for the premium, all right? What do they think, I'm rich? This is ES. So we had this up move. We had this up move on ES. This ginormous up move. We went up 40%. An index going up 40%. Absolutely insane talk of an index to go up 40% from April. So this was like the end of April, like April 17th or something, to April or October 1st. So it took what? Let me count that out. May, June, July, August, September, like five or 6 months. It took 5 or 6 months for an index to go all the way up 40%, right? Then what do you see here? It literally just consolidated. You can look at this as like an overall move down, because like, yeah, from here to here, it's an overall move down. So this is the down move that I was talking about. We had this giant up move, and then this is our down move. And this is what I mean. The down move tends to be a lot more like rickety-rackety than the up move. The up move, this was a super fluid up move. Not as fluid as the one we're currently having. This is just absolutely insane. But this was a super fluid up move. And as you can see, the down move is way more choppy. Head on to the weekly, you can see it in a much clearer light. This is the high that we were talking about. Literally, for 17 weeks, that says 17 bars right there. For 17 weeks, we did nothing. For 17 weeks, we created this little box for 17 weeks, and we just stayed in this box. 17 weeks, that is how long? That is 70, 49. That is 119 days. 1/3 of the year, we literally just sat in this box and did nothing. Then we had our actual genuine down move. So like I said, it's a lot choppier when it's a down move rather than an up move. So we had this super fluid up move, had this choppiness where orders were filled. This is a great place for orders to get filled. Then had this down move, which, by the way, look at this beauty. What do we have here? Guys, just bear with me. What did we have here? Do you see this? Do you see this choppy zone? Previous highs? Oh my gosh. It just keeps on going. Like I'm acting like I'm seeing this for the first time, but really it's insane how like look, we had this. I mean, it wasn't so fluid, but the point is like we're in an uptrend. We're in an uptrend. We had this down move. What happened to this down move? Where did this down move go? This down move hit those previous all-time highs in this general just little consolidation zone. This is where that down move hit. What happened from there? What happened from there? We had this giant up move, like I showed you. Let me erase these drawings, because, yeah, there. We had this giant up move, like I showed you. What did we do? We went back into this consolidation zone. Went back into this consolidation zone, and we bounced an insane amount, an insane 20% in just a couple of weeks. Now, this doesn't mean that every single up move, we're going to basically trail down to the previous consolidation block. What this means is just that if in the case it hits this consolidation block, you find an entry to go long. If in this case you see that, oh my gosh, liquidity sweep aligned, oh my gosh, lows, 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 oh my gosh, previous all-time highs, previous all-time highs, previous all-time highs. If you gather enough information to tell you that, you know what, I'm gonna go long here, the consolidation block is just like another point where you could say, okay, now I have this thing also adding on to my idea that I want to invest into this index or this stock or this company. And this is what I just mean. This is what I mean. Like orders were filled in this area. Orders were filled in this area. It's the monthly, you can't really see it, but on the weekly, filled in this area. This is weeks. This is 32 weeks, half of a year. This is, well, like I said, this was 22 weeks, 17 weeks. These are weeks that price just sits in a price range, meaning that is a super well-balanced price range. Orders can get filled. If price pushes past it and it returns to this area, orders can get filled. Price will have a great opportunity to enter into this zone, fill its orders, and go higher. While everyone else is panicking, you can literally see everyone else was panicking. How much did the market go down here? It went down 20%. Everyone was panicking. An index going down 20% in a matter of weeks. They're selling. What do you see? Liquidity sweep, 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 consolidation block, previous all-time highs. You're buying. Your average entry, if you bought like here, your average entry might have been like down here. You'd have been up right now 40%. Just to the previous highs, you'd have been up 32%. Look at this. Your average entry, let's say it would be right here. For the sake of the argument, your average entry was the worst it could possibly be. You literally just bought all as soon as previous highs were touched, as soon as it was a liquidity sweep, as soon as it was a consolidation block. You bought at the worst possible time. Obviously not the worst possible time, could have bought here. But using the things I've taught you, you bought at the worst possible time. Of course, you're supposed to dollar cost average, boom, boom, boom. But again, that could be a future video, like where to dollar cost average, when to notice stop. That's besides the point. You bought here. You would have been up 26% on an index in a matter of weeks. But this is where I'm getting to. Now look, the next time this opportunity happens, on NASDAQ, it dropped down like 15%. On ES, it only dropped down like 11%. But that's still 11% an index goes down in a matter of weeks. Everyone is panicking. People thought the market was going to crash. There was literally memes all about it. Horrible market, red market, it was terrible. There are memes all about it. Everyone thought the market was going to crash. And it always happens. It always, maybe has a flash crash or whatever. Market's going down. What do you see? Liquidity sweep, all-time highs, consolidation block, entry. This is what the rich does. They don't care about this down move because guess what? This was their entry. This was their entry. Their entry's down here. So the next time there's a down move, they're like, oh, an even better entry. So they buy here. Now their average price is like right here. But the thing is now their average buying is here with way, way, way more money than they had in the first place. So they just keep buying, they keep investing, and now their average price is going to be like here when the market's like here, right? And so I just want you to keep this in mind. A more technical definition of this, if you're really into like the technicals and whatnot, it is I'm pretty sure I talked about this in the previous video. It is like if we're in an uptrend, it is the last up move before the break of structure. So that this would be the order block or the breaker block, whatever you want to call it, consolidation zone. And if price ever decides to go into this area again, there's a pretty good chance that it might use it to then reverse off of to the downside. If we're in a downtrend and we see that, like right here, we are in a downtrend, If we're in a downtrend and then we have this last down move and then we start an uptrend, this last down move before the start of the uptrend becomes the place where orders get filled. So here we have this little downtrend that's happening, right? Then we have this final down move, this final weekly candle to the downside. And this is the final weekly candle to the downside before we start making higher highs and higher lows, start making that uptrends. And so this would be our technical breaker block or consolidation zone or whatever. And we can see that price pushed into it price pushed into it pretty precisely and then used it to reject. But again, that's like the technical definition. You don't have to look really at like the specific, like actual literal definition of what a breaker block consolidation block is. You can literally just look at the chart and be like, okay, look at this. This is the monthly time frame. Candles just stacked upon here. You didn't even have to check for, oh, the last candle, the last candle. You could just see like, bro, like this area is clearly a zone where price just consolidates. You want to make it a little tighter? This area. This area, price just consolidates in this area. So when you see that price bounces into this area, consolidation block, then bounces back into this consolidation block, you see that it's kind of like sandwiched in between the two. But the point is, it's literally using these consolidation blocks that we're talking about in real time. It's using them as places of reversal. Bounced here, reversal. Bounced here, reversal. Went above here, boom, tapped into it, reversal. Boom, tapped into it again, reversal. Tapped into it a third time, reversal. Like these are just zones where price could reverse and potentially give us an entry for the future. Right here, I didn't even mark this out. I think I just deleted it or something. Right here, you could just see that, okay, for literally how many months was this? This was 1, 2, 3, 4. 4 months, price literally just stayed in the same exact spot. We say, okay, this is clearly the consolidation block. 5 months if you count this, 6 months if you count this, whatever. 6 months, price stayed in this relative zone. If price goes back into the zone again, if it aligns with previous things that we talked about, like these weekly lows, if it aligns with those previous things, we can use that as an investment opportunity to then go up. All-time highs. All-time highs are a very good level to either take profit off if you're in an investment or to invest in if you're looking to invest. So take profit zones. Take profit zones. All-time highs. Why are they important? All-time highs, if you think about it conceptually, this is the place where market thought that there is no way the stock goes any higher. There's no way this index is valued at this level. There's no way that this index that is right here, there's no way that it's valued any higher than this. Like this is what all-time highs are. They're like, no, this thing is overvalued. We're gonna send it down, or perhaps it's just another retrace. But at this point in time, each of these were all-time highs at one point. At this point in time, price thought there's no way this thing is worth more than it is right now. We're gonna send it lower. And sometimes what happens is that it goes even lower, which gives us an opportunity to enter at the previous all-time highs. Just like I said with consolidation and order blocks, that these were places where prices could get filled. Just like I said, how boom, price goes up, consolidates a little. This kind of could constitute like a downward trending movement. But let's just say it consolidates a little and then ends up going up. So think about this. Price did not move for like, I don't know, however long this time frame is. Price did not move at all. And it retraces into this move. It is probably going to bounce off of it. If we get like further confirmation, it's probably going to bounce off of it because orders were able to get filled at that area. There were so many orders there that price just kept bouncing, and kept consolidating. There's so many orders there, price just did not want to move. So I'm just looking at my dog. I don't know if you can see. It's right there. Completely just knocked out by my lecture. But if you think that there's a consolidation zone that could push price upwards, so like people could literally not push price down any lower. Imagine the amount of power that a high gives to a specific company. If people at this point literally thought that it is way too overvalued, like I said, if you looked at my previous videos on liquidity, which I recommend you do, banks need orders. Banks need orders to fill their orders to push price higher or to push price lower. In this case, we're investing. We're thinking about banks needing sell orders so that they could buy up to push price higher. There are tons of sell orders here because this was the previous all-time high. So what is a bank going to do? If it pushes price into this area, it's going to have a ton of orders. So if price retraces into this point, or let's say like now we're at this new point where we have this new all-time high being made, new all-time highs right here. If price retraces into this point, this is a good opportunity for us to look at it and see the momentum of the stock. Did it shift? Did it change? And if the stock or the index still has like sound reasoning to go upwards, this is when we buy. What usually ends up happening is that all-time highs kind of double as this consolidation block area because like right here, we see that even this was all-time highs at one point. This was all-time highs. It pushed above all-time highs, created this little consolidation zone. What did price do? Push above, retrace, push above, right? These were all-time highs. These were all-time highs. You see price literally is just bouncing up and down as this little box. If you think you could draw a box around it and encapsulate it, you probably can. You see price is just bouncing here. What did price do? Retraces into it. Boom. Push. And so what I mean to say is that all-time highs You don't have to be at all-time highs to have this little consolidation zone that you could buy off of. But more often times than not, a stock does not just more often than not, a stock does not just go like this, right? It doesn't just go all-time highs, one candlestick up, one candlestick down. It's a beautiful demonstration, by the way, if you could tell. Beautiful. More often than not, it goes kind of like this, consolidates a little, even better demonstration. And then, creates this little consolidation block that if it goes here, it could go down, or it could push higher, and then use this as further confirmation to push the stock price up. Okay, here, this is a pretty good example. These were at one point all-time highs for Microsoft, right? Microsoft has just been going up, climbing up. This is just, well, this kind of looks like just a weird accordion. So I guess it'll be kind of hard to draw a box, but here, this can encapsulate most of the area. Previous all-time highs. Oh, and even looky here. Price pushed above, retraced. Boom, ripper. What did price do? When it ended up going down, ended up sweeping low, retrace into this box, rip, retraced again, rip. I really hate when people say, okay, just buy it and hold it. Just buy it and hold it because you would have been up in the long term eventually. I feel like that is just scope because you could have bought it and held it here. And okay, now you're up 150% instead of being up 50%. People are telling you to just buy and hold because they don't want you to be richer. I find absolutely no problem in telling you to invest here because guess what? I'm buying here. And if you also buy there, what is that going to do? That's going to push price up. It's going to push price up. So, herd thinking, right? But they're not going to tell you to, look for the sweep, look for the consolidation zone. Because what? They're the people that are selling here. They're scared to their stocks. They're the people that are selling here and buying here. They're the people that are selling here, buying at all-time highs, right? And they're not going to know any different because, yeah, in the long term, they're going to be up. But guess what? You're going to be more up. You're going to be able to take more vacations. You're going to be able to take more vacations, live more of a life than them. You're going to be able to see your kids more, perhaps send your kids to more prestigious college than you could ever dream of. You're going to be able to pursue your life goals, pursue your hobbies, start your own business, whatever you want. They're not going to be able to do that. Or maybe they are. But this isn't about them. It's about you. And if you apply this to your own trading, you're going to be able to get a lot better off than they ever were. As you can see here, I didn't talk about gaps, huh? I'll talk about gaps in the next video, guys, I promise. Gaps in the next video. And then what to do? Price dipped into this area. Yeah, I dipped a little below. Then price ended up pushing past that area, up 25% on Microsoft. Long-term play, you're probably not gonna sell it until it hits all-time highs. We'll see what happens. Microsoft can go down, Microsoft can go up. But guess what? You're not the one who bought Microsoft when it was at $555. Just think about it for a second. For someone to have sold it at $555.45, someone must have bought it at $555.45. Someone literally top ticked Microsoft to the penny, to the cent. Someone did that. With this strategy, it's not going to be. Someone is sitting at a 28% deficit on Microsoft. Microsoft, this big stock, they're sitting at a 28% deficit. You, if you follow this strategy, perhaps you bought at this gap. Perhaps you bought at the end of this gap, at the end of the consolidation zone. You'd probably be sitting at break even right now. So this is what I'm saying. You can do a lot more than you think. It doesn't take a genius to figure this out. It really doesn't. Let's go to IBM. IBM. Not a great example with IBM. Like I said, this is a type of thing that what I'm teaching you, I'm not telling you that the stock market is going to hit those highs. I'm not telling you it's going to hit the consolidation block. I'm not telling you it's going to sweep the liquidity. I can't predict it. No one can, except for maybe the banks and the institutions that are actually making it move. I'm saying that as an investor, if it hits those points, those are points at which you might be able to buy it. Those are points at which price might start to reverse. Well, everyone's panicking. Everyone's saying IBM's a crap stock. No one likes IBM. You're like, yeah, sure, buddy, keep yapping. Guess who's laughing now? 172%. Guess who's laughing now? Shall we do another stock? Let's do one more stock just to kind of put the nail in the coffin. This is a strategy that's applicable to lower timeframes too, but I kind of just wanted to go over high timeframes because, again, I want to teach you about investing. This is investing. This is for the layman, the person who gets off his job at 5 p.m., like just wants to relax, be with his kids, but wants to vacation and wants to have more financial independence. What do we see here? Boom. Consolidation block. What do we see here? Price pushes past higher, price dips into it, price rips. Price dips into it, price rips. What is this? What is this? That's a low. What does price do? Liquidity sweeps the low. It doesn't close below the low. Liquidity sweeps it. Sure, on the daily time frame, everyone's panicking because on the daily time frame, this candle was all the way down here. Everyone's panicking. Everyone's being like, dude, you're stupid for buying Google. You're absolutely stupid. This is a year ago. This was July 2025, 1 year ago. Like, dude, why'd you buy Google? Look at this thing. This thing's dropping 30%. Why'd you buy Google? You bought it. You saw previous all-time highs. You saw consolidation block. You saw liquidity sweep. What did you do? You bought Google. Perhaps you bought all of, my bad. Perhaps you bought all of Google right here at this point. What happened? What happened? What do you think happened? What do you think happened to your Google stock after a single year? Up 160%. No biggie. You know, just the amount you would have made in a couple years you made in one trade. You just doubled your entire life savings in one trade. More than double. 150%. See, okay, this would maybe allow me to differentiate kind of like when to invest and when not to invest. The point that I'm trying to make is that you can't see a box here. Where's the box? Where's the box? There's no box here. I guess you could draw one here, but it's incredibly messy and I don't know. It's just a little too tight. Like here you can clearly see 100% there's a box, right? So now next time, like this is a little too tight for my liking. Like we're barely past the box. We didn't really close. You know, we entered it technically, pushed above. Don't really like it. What I like to see, we push above, boom. Now this is a clean push above and close into the box and then push out. So here, if it looks messy, if you're kind of considering like, oh shoot, should I enter, should I not? Maybe you probably should stick with a safer stock because there's tons of stocks out there. I'm sure you'll find the correct stock. I'm sure you could look at Home Depot and find, geez Louise, this entire thing looks like a box. But I'm sure you can find Home Depot and see, oh shoot, box here. Maybe this is a buying opportunity, right? So yeah, I just want you to look at this and just not see a box, not see a consolidation block or whatever, and literally click buy it every time like a monkey. I'm saying you should pair these things, pair box, pair liquidity sweep, all-time highs, pair it all together to create your perfect entry. In the next video, I'm gonna literally be talking about exactly how to do that. I'm gonna probably explain liquidity sweeps, not liquidity sweeps. I'm probably gonna explain monthly gaps, weekly gaps, stuff like that. And then I'll talk about maybe where to kind of stop dollar cost averaging, where to be like, okay, this company might be failing, or it just might be a safe point to stop dollar cost averaging. And then maybe in the video after that, I'll talk about combining this all together. But if you master this skill, you could definitely get yourself a lot further in life, a lot further in financial independence, and you know, go on vacations more. You could go to Hawaii. You could go to a Lake Tahoe cabin. Those things that you always dreamed about, you could achieve them. Like think about it. This is your life. You only get one life. How can you tell yourself like, oh, I'll go to the Lake Tahoe cabin next year. I'll go to Hawaii. I'll do that tropical vacation with my family next year. I don't have enough money this year. It's kind of tight. Next year comes, you're like, still don't have enough money. It's okay. You're putting it off, putting it off, putting it off. Maybe eventually you go. But this is your life. Who is someone else to tell you that in your life you can't go to Hawaii? Why? Because you don't have enough numbers on a screen. You don't have enough paper in your wallet. This is a way to kind of step around that too. Still, maybe you have your own job. You work your own job. You still kind of have to put the hours in on that. But then the money that you do make, it works for you. So now you got yourself and your money as like a backup that's standing with you, that's pushing you forward. And yeah, I hope you enjoyed the video. I'll talk to you in the next one, and peace.